All righty, traders. Hold on. Let me just tell the chat room we're starting, just in case they did not hear. Okay. Choppy day. First of all, the dollar is a little stronger today. I say a little because it really is on par. It's just a little bit. The euro's pulling back as you'd expect. And I'm still anticipating the euro to go just a little bit lower. I've got a buy order just below the market. Just below the lows. I'm sorry. Just to get a little bit more euro dollar. I still like it on the long side, but it is a little stronger right now. And the risk with the dollar, and this is the risk with like playing the dollar on the short side, is if this deal doesn't pass, the dollar should strengthen. That's the problem. So I'm a little fearful that if I get too aggressive down here, and let's say a deal doesn't get announced, or stocks just start heading lower, because let's say a deal isn't going to come till next year, or maybe the package is too small. That's what she said. I'm just kidding. That was a bad joke. I feel a little spunky today. I don't know why, because I slept like crap last night. So anyway, hopefully some of you got a little giggle out of it. Did that even make you laugh? Oh, of course it made you laugh, Joe. You're easy. You're easy. You're easy target audience. Anyway, if the package is just too small, she ain't gonna like it. Nor will stocks. So the problem would be is that the dollar should strengthen, and then we might actually see a dip further in the euro. That's why I'm going to be buying some more euro down here. I've already picked up some at the lows today while we were on the daily or on the face webinar. But I don't, it's like, how much more aggressive do I really want to get, just in case, And it's not like I believe a deal's not going to get done. I do believe it's going to get done. I just don't know if it's going to be within the timeline that the market really is expecting. So the real, when you're talking about stocks, the risk here is the S&P. Hello. Okay, there we go. The risk is the S&P, that we're just sitting here hovering around this 3,400 level. And obviously, if we break below that, things are going to get a little, a little bit more bearish. Now, let's talk about something I just did earlier in the chat room. Is I sold a little dollar yen. And here's the reason why, just so you guys know why. God, these charts are slow right now. This is a ForexAnalytix update. So you guys, I think, let me make sure. Let me make sure before I open my mouth here. I can't remember if I was drawing it myself or, oh no, it was. Okay, so this is the ForexAnalytix update when we were trading at 104.77. So when we got to 104.60 or 86, excuse me, I sold some. Looks like a bear flag, smells like a bear flag, but I'm not ignorant to the fact that we've got this huge support down here. So, maybe I'll take 10 pips out of it and just say, well, I'll wait till we break the lower bound of this channel, the flag, if you will. So I'm not too sure what I want to do with that, but for me, there isn't a lot to do. I did exit gold before it really started to break down here. Well, actually, I exited right around current prices, but I'm a little fearful of gold that we did this false breakout. And so this false breakout, let me remove that. This false breakout should lead to a breakdown. And again, this is where my skepticism about this is my skepticism about are we going to have a deal or not? I do think gold is going down with risk off. And I think gold is also out opposite of the dollar still. So as gold goes down, dollar goes up. So this is where this is what one of the things that makes me a little skeptical of the market at this moment. Jason asked Blake, what tool do you use to make that trend line go up, down, and back up? The red one on the Euro chart, the red one on the Euro chart. I just use a regular trend line, buddy. I go like this. It's just what the easiest way to do this. Let me give you a little tutorial on TradingView while I'm here. There's this button right here. It says stay in drawing mode. And if you stay in drawing mode, I mean, it's easy to do. You 1 click, 2 clicks, 2 clicks, 3 clicks, 3 clicks, 4 clicks, or actually that was incorrect. It's actually, you make a line, 1, 2, then I can click again, makes another line. That was 1, 2, 1, 2, right? And then I'm just connecting them. That's it. Nothing too elaborate. It's just staying in that drawing mode helps. It makes it easier, and I guess it probably makes it seem from your point of view that it's something more special than that. But for me, I've just been doing it for so long. I'm kind of efficient at it, I guess. That's it. Okay. Anything else I really wanted to cover? Here's the thing. This to me is very frustrating because it's another week lost. Another week of, holy cow, man, please just, deliver us some volatility here. I mean, that's, what I'm really ultimately hoping for is just to see some volatility in the markets. And, without definitive answers on stimulus or Brexit, and really nothing changing regarding the election as far as polls go, there's nothing going on. Now, we do have a debate tonight, the last debate. The good news is the moderator will be able to mute whoever's speaking, which is good on both sides. I mean, Donald Trump likes to talk over everybody, but Biden's so slow in his thinking, it takes him forever to elaborate an idea, then they'll be able to cut him off too. That's good because then we can actually, maybe it'll be a little bit more tolerable. I don't know, but will it sway the polls a little bit is the question. I don't think it will because I think so many people have voted already. I was looking at just because I live here in Arizona. Arizona has been receiving 100,000 early votes in the mail. I already mailed mine out. My wife's has already been counted. I did it actually 2 days ago, but our county is receiving 100,000 ballots a day. That's a lot. It's a lot. And so, a lot of the point I'm trying to make here is, and I know we're not the only place. Texas is the same. Everywhere is the same because of COVID. So, will polls matter? And, even if we get a slight change, is the market going to, be influenced? I don't know. Brock says, Blake, in your opinion, is the market view of a deal mean just between Trump and Pelosi? Yeah, I think so. Yeah, actually, I think so, because I think the market assumes that if they come to an agreement, it's going to pass because Trump will get all the Republicans in line. I don't know if I necessarily agree with that. Here's the reasoning. Okay. There are, you know, I know whatever side if you're American, you know, whatever side you sit on is fine. But from if I'm a Republican politician, right? I'm a congressman. If I think that Trump might not be reelected and I need to break ranks from him, am I going to vote with him or for the bill or against him if I really feel opposed to it? You know, those are the questions where I think it's a really tough. I think it's a tough question for those politicians that are in office that are like, you know, if I vote for this and my constituents, you know, are really against it, does that cost me my seat? You know, so I don't know. It's tough. Yes, Joe, Kanye West, that would be correct. He'll be our new president. Alexander says, assuming stimulus is priced in, is today's strength in the dollar a correction before the next leg up in the euro due to the recent strong euro breakout? I mean, I'm viewing this technically as a correction right now. That's the only way I can view the euro, is that this is a correction before we make a move. You know, move out of the triangle, and you know, this is corrective in nature. I believe that, but everything hinges on headlines now, you know, and that's why I try to ignore the noise and just go with the technicals right now, because, you know, but in all honesty, technicals are not going to matter if a headline comes out and it's against, you know, if it's going, you know, opposite of the direction you're trading. I mean, it's just not. The best thing that you can do with technicals is tighten up your entries. So for example, I think that the euro is going to stop here at the 38% retracement, which is here. Now I'm starting to think, okay, maybe it might drop to the 50% retracement. Well, if that's the case, and you and by the way, I had a lot of profits yesterday from the euro, so I can be a little more loose with my entries, if you will, meaning I can expose myself a little bit earlier. But if you're like, oh man, I really am just looking for that perfect entry. Well, that perfect entry in this case on the euro is probably more here at the 50% retracement at 117.85, because then your risk is only, you know, let's say your risk is only 20 pips. From here, your risk is still, you know, 70 pips. So that, I mean, that's my, you know, initial thoughts. If you, you know, whatever way however you're feeling, just let the market come to you and get to that price that you were waiting for, you know, specifically, and let it go there. Yeah. So my best suggestion. Anyway, all right, guys. Hey, if you are not part of the Forex Analytics community, come join us. And for those of you that are, thank you so much for your support. And I will see you tomorrow morning on the Face webinar. All right, guys. So let's hope for some volatility next 24 hours. Thanks, everyone.